All right, let's start with the first area of financial management, working capital. First of all, we need to know about the nature of working capital. All right, and what is the nature of working capital? The amount tied up in working capital is equal to the value of raw material, work in progress, finished goods, inventories, account receivable, and account payable. And account payable, right? And the size of this net figure, all right, the size of this net figure has direct effect on the liquidity of an organization. So far, so good, guys. I hope you got it till here. Okay, the net working capital. The net working capital of business is its current assets less current liabilities. So, what are the now the question is the key current asset. What are the key current assets and current liabilities of the business? So, the current assets are cash, inventory of raw materials, inventory of raw material, inventory of work in progress, WIP means work in progress, then inventory of finished goods, inventory of finished goods, receivables, that is account amount receivable from the customers, all right, and marketable securities. The current liabilities, uh, accounts payable, taxation payable, dividend payments due, short-term loans, long-term loans maturing within 1 year, lease rentals due within 1 year, all right. So far so good. Now we need to do need to know different characteristics of we need to know working capital characteristics of different businesses. Okay. So, what are the working capital characteristics? Different businesses will have different capital characteristics, and there are three main aspects to uh, these differences. Number one, holding inventory. Holding inventory from their purchases from external suppliers through the production and warehousing of finished goods up to the time of sales. All right. Then we have number two, taking time to pay suppliers through the production and warehousing of finished goods up to the time of taking time to pay suppliers and other accounts payables, that is our creditors. All right. uh, Depends, is it 30 days period credit, 60 days, 90 days, whatsoever. And then number three, we have allowing customers account receivables time to pay. All right. Okay, now here are some examples. Number one example is supermarkets. All right, whenever you goes to the supermarket, uh, supermarkets or other retailers receive much of their sales in cash. Okay, so when do they receive in cash or by credit card, or they do receive their payments by via credit card or debit card whatsoever. Uh, so they receive the cash from customers mainly on sales, but however they typically buy from suppliers. Uh, they buy from suppliers on credit. They may therefore have the advantage of sufficient cash holdings, which may choose to invest, or what they can invest whatsoever. Another example is company. There is a company supplies to other suppliers. Company supplies to other suppliers such as wholesaler. All right. So in this case, they might be buy, they might buy on credit, they might sell on credit. Okay, even buying on credit, sell on credit. So now here, to coordinate the flow of cash might be a problematic. Such a company may make use of short-term borrowings. They may have to take uh, borrowings, take the borrowings, the loans, the overdraft, or to overcome the shortcomings of the cash in the business. And then we have another example of a smaller companies. In case of smaller companies with limited trading record may face particularly severe problems. Lacking a long track record, such companies may find it difficult to obtain credit from suppliers. At the same time, customer will accept to receive the length of credit period that is normal for the particular business concern. The firm may find it itself squeezed in its management of cash, because, as I said, supplier may not give credit. Customers wants it on credit. So this might be the issues faced by the business. Okay, so there are two main objectives of working capital management. Number one, the one number one objective, that to make sure that it has sufficient liquid resources to continue in business, and number two, to obviously to increase its profitability. All right, guys, hopefully you got it till here, and I will continue with this area in my next video. So stay tuned.